After numerous weeks of consolidation, Bitcoin has finally corrected towards 29,000. The big question is, will Bitcoin continue toward the downside, or is this correction nothing more than a bear trap? Let's go ahead and jump into the video. Okay, MegaWhale team, welcome back to the channel. Thank you for tuning in. I hope you're all having a fantastic day today. We're here to take a look at Bitcoin, discussing the current correction, what it means for the macro charts, where Bitcoin is heading on the higher time frame and small time frame, the economic news, which will be the Federal Reserve interest rate hike, the technical and structural data on the macro charts, and so much more. We are going through absolutely everything you need to understand what is happening and what to expect. Before we get into it, smash the like button, hit the comment button, and subscribe to the channel. We post daily videos for Bitcoin focusing on the facts, data, technical and structural information, relevant economic news, and news events. No hype, no BS, no emotion, pure raw TA. If that is the kind of content you're interested in, join us on Telegram. It is the second link down below. You'll get access to charts, updates, videos, educational posts, news events, and everything you need to stay in the loop with cryptocurrency and Bitcoin. If you're interested in our VIP channel, you can join our trading channel. We post trade signals with exact entries, exact targets, exclusive analysis, and trade justification. As you can see, this link trade hit absolutely every single target for 128% profit, and that is just one of them. We post up to 20 plus trades a month, and you can find our entire trading track record in the free channel. Go to the pinned comments, click the links over here. For example, last month over here, we had 34 trades, 26 wins, 8 losses, 76% win rate. Again, all information can be found. You'll get access to that channel and our trading chart and education chat, where we teach you guys how to trade. You guys are trading in here, developing your skills and learning to become better traders. Go ahead and check it out. Let's get into a video, starting off with the market data. For today, volume is down 30%. Again, that is expected. Number one, we saw a huge surge in volume as Bitcoin corrected aggressively toward the downside in the last 24 hours. We have reached now a point of which historical trading orders have increased. This area being the 29 to 29.2k level. If you've been watching our channel for quite some time, you would have known we have been predicting a breakdown from this horizontal structure for many weeks. In fact, we posted this trade in that VIP channel, so if you're in VIP, you would have caught that trade toward the downside. But I digress. The reason we said 29.2 to 29k was a key level, or a first target, was because we saw on the VIPV, we had a huge gap over here, followed by a nice little mountain. That suggested the range between 29.8 to 29.2 was a low resistance range, an area of massive liquidity where the price was likely to, if broken down, would go through it fast and aggressively. When we reached 29.2 to 29, we expected to see some sideways consolidation, some compression, and that is what we are seeing. That is why we are currently seeing the overall volume for the 24-hour period reduce a little bit. With reduced volume, we are seeing overall liquidations reduce, and of course, with reduced liquidations, we're seeing overall volatility and momentum decrease. So looking at the 24-hour period, it is down just a little bit. Looking at the monthly returns, Bitcoin is now down 4.23% for the month. Actually not looking all that great. If we take a look at the macro charts, which we will be doing later in today's video, we can see Bitcoin has around about 5 days and 22 hours until that monthly candle close. And it is absolutely paramount that we remain at least above 28.4k for this monthly candle close. If we lose 28.4k, if we lose this local low point, particularly on the prior candle open, which is sitting around 27, we will be breaking down and going further. 28.4k is that key level. We're discussing why later in today's video. Moving on to the liquidations, taking a look at those total liquidations, we can see a pretty even spread between shorts and longs, which is very indicative of compression sideways chop and consolidation. If we zoom into the smaller time frame really quickly, we can see on the small time frame we actually had a rising channel formation which is broken toward the downside. We're discussing this in today's video. Moving on to the DXY is on a nice move upwards. We've seen a retest of our bullish trigger. Again, we have not broken through our point yet at 101.5. Our bullish trigger being 101.5, if broken, will result in a move toward the upside, potentially retesting our downtrending resistance. If the downtrending resistance does break on that 5th attempt, we can expect a continuation upwards to potentially retest these local levels of resistance over here, and if broken through, could push higher. This would be bearish for the markets and most likely push the prices down. It's not so much that the DXY rising is bearish, it's what causes the DXY to rise, which is bearish, and that is of course the potential looming threat of increasing interest rates. In less than 24 hours, 15 hours and 9 minutes and bloody 50 seconds, I'll be changing by the time you watch it, we do have another interest rate hike decision. At the moment, the current probabilities are 100% in favor of an interest rate hike, sitting at 98.9% at 25 basis points and 1.1% at 50 basis points. As you know, an interest rate hike is going to be bearish. The reason being is if interest rates rise, the cost of debt rises, the debt service ratios for individuals and companies rise, the available cash flow decreases, and therefore people are less likely to invest and more likely to sell their risk assets to service those increasing debt requirements. We have seen that play out. We have seen the markets drop down for many months last year. We saw that flip when interest rates started to decrease again. We went from 75 to 50 to 25. Although interest rates are rising, the overall trajectory of interest rates were decreasing, and therefore we saw the reverse. We saw markets start to rebound back upwards. If we explain this really quickly before we get into Bitcoin's analysis, we can take a look at a specific chart I like to call the overall interest rate and inflation trajectory curve. This represents the trajectory of interest rates and inflation over a period of time. We saw interest rates rise as a result of rising inflation. We saw interest rates rise as a result of rising inflation. Inflation topped out, therefore interest rates did not continue upwards. And by continue upwards, I mean the aggressiveness of the hikes, meaning we went from 0.75 to 0.50 to 0.25, and that trajectory created a downward trajectory. That downward trajectory formulated the basis of the entire rally the markets have seen. It was a decreased perceived systematic risk over a period of time. It gave investors the perception that in future periods, the risk in the market will have decreased, and therefore now is a good time to buy to front run that decreasing risk. At the moment, we are seeing the reverse. What we are now seeing is potentially a pivot upwards again for these interest rates. We're seeing the overall perceived systematic risk potentially increase, and that is why the markets have corrected moving into this interest rate hike. The big thing is, it is not so much the interest rate decision that is going to affect the market, it is what they say in the meeting afterwards. If they announce that they've done a 25 basis point or a 50 basis point hike, and then they say in future periods, we expect to continue to raise rates, that narrative is what formulates the overall trajectory of interest rates rising again, and then the perceived systematic risk going up, and that is what determines overall market risk, and that causes market asset prices to fall. So watch not only the release, but also watch what they say about the potential impacts in future periods. Moving into Bitcoin, guys, I wanted to briefly interrupt today's video to discuss my favorite exchange, Bitget. If you're looking for a safe, honest, reliable, and accurate exchange, look no further than Bitget. You can sign up by the link in the description to support the channel and get access to 3 exclusive perks. That being up to $5,005 in trading rewards, up to 15% discount on your trading fees, and exclusive access to our MegaWhale promotion campaigns that we run every few months. Alongside that, guys, Bitget is a non-KYC exchange, meaning you do not have to KYC. It is completely optional. Bitget also has a protection fund that secures user assets against external hacks and threats in the space. Alongside that, guys, Bitget offers up to 125x leverage on futures with extensive amount of trading pairs and liquidity on the market. I highly recommend signing up to Bitget. It is the exchange I've been using for over a year and a half now, including all of our members. If you're interested in signing up, trading there, and supporting the channel, you can do so with the link in the description. Thanks for listening. As we are going to start on the smaller time frame today and then break it into the higher time frame, starting on the 4-hour chart, discussing what has happened, discussing what we could see next, and then talking about these possible scenarios that we're going to describe and what impact these scenarios could have on the higher time frame price action, because the higher time frame price action is starting to look weak. Looking at the current structure, we had a huge 30-day long horizontal consolidation at a major resistance. The major resistance being the $32,000 horizontal resistance sitting on Bitcoin's chart. The reason we knew this was a resistance is because we look at the VRPV right over here. We can see immediately after 32,000, we had a huge gap in the VRPV. This is suggestive of a order block or a range of price action, which constitutes a huge amount of resistance, an amount of resistance large enough to when if broken above, will push the price into this low resistance range. And if we are pushing upwards into a low resistance range, just as we have seen the price push downwards into a low resistance range on a smaller time frame, we generally see quite a strong and volatile reaction in that particular direction. And that still stands. Although we're probably not going to be breaking up right now, if we do break up, that horizontal level still plays the same way as we'd expect if we saw an immediate breakout. 32,000 is still a major resistance, and 32,000 is still a level in which Bitcoin needs to break above to continue its current uptrend. So, is this uptrend still intact? The answer is very much yes. We'll discuss that later in today's video. So, let's talk about the current price action. We have seen Bitcoin break down. Here is the thing. We had two targets for Bitcoin. Number one, the measured move from the high point. Okay, the high, which is our resistance. We took the lowest point of resistance to the uppermost part of support in this channel. Apply that distance to the breakdown point. We can see we had a target just under 28,800. We basically reached that initial target. If we apply it to the upper level, we actually saw that target hit precisely. If we take the high point of resistance to the low point of support for the wider measure move and apply that to the breakdown point on the lower part, we can see the target ends up around 28k. Now, if we look at the current trajectory of price action taking from our two high points, high point 1, high point 2, we have an overall trend. Our current trend is very much pointing down. If we go ahead and pop a little arrow on that, we can see we have a downward sloping trend. So right now on the hourly charts, we have a downward sloping trend out of a horizontal consolidation with a potential measured move target of 28.4k. Therefore, the overall trajectory of price action should take the price downwards into this range unless the price can break the downtrending resistance first, which is represented by this downtrending trend line. So, to summarize, if the price breaks above the downtrending trend line, we are looking for a reversal to play out and a continuation back upwards. If the price fails to do so, we should expect the price to continue downwards towards 28.4. 28.4 is a huge level of support on the chart. If we zoom out to a 6-hour chart, we can see that 28.4 represents our local high points of resistance in this entire cluster of price action between the 20th of June and going all the way back to early May 2023. If we invert the chart, we can see this area is going to be an area of resistance, right? Support becomes a resistance, resistance becomes support. That is going to be our target for Bitcoin if we continue down. So let's discuss what we could do to continue down. Let's talk about what the price action is doing and discuss the probabilities. So on the smaller time frame, we see two things. Number one, we see two gaps on the VRPV. We have a gap above 29.3 and we have a gap below 29. So first and foremost, we can identify that our 29k level is going to be a trigger point for the bearish continuation downwards. So a breakdown of 29k will, and most likely will, according to our data over here, will suggest a continuation toward the downside, as bulls will have lost the ability to regain this area as support. So if we're looking for a short-term continuation downwards, we are looking for a loss of 29k. That will take Bitcoin to 28.4. If we're looking for a continuation upwards, we are looking for a break over these high points right over here. We're looking for a break of around 29.363. Oh, we're seeing a little push up right now. We're looking for a break of 29.361. A break over that level should take Bitcoin to fill this local gap in the price action. Where could that push Bitcoin up to? We're looking for a target of these low wick points over here. So we're looking for anything around about 29.6 to around 29.7. Even if we see that move upwards, remember, Bitcoin will still be in a downtrend as it will be underneath this downward trending resistance. In my personal opinion, if I was a market maker, if I was moving the price, if I was determining what happens to liquidate certain positions, I would say the best possible scenario for Bitcoin right now would be to push upwards, would be to grab this top side liquidity in this range, liquidate all of these late shorts, and then push the prices back down. That is what I'd be expecting. I would definitely expect this scenario to occur first, rather than a straight continuation downwards. Now, if we do lose 29k level, that will confirm a straight continuation downwards. But definitely do not sit here and think we are going to go straight down. We have moments of up, we have moments of down, even on downtrends. It's very important to understand that if you're only turning bearish after significant crashes, you are most likely two things. One, wrong, or too late. You can still be profitable when late, but the probabilities are no longer in your favor. You might just catch the small back end of a move. So watch out for the market. If we see a move upwards into this range, I'd be looking for shorts again, provided we remain underneath this downtrend resistance. If we lose 29k, I'd be looking for shorts again. If you want to take longs, you can do so over here. Again, keep your stop losses tight under this level and look for targets in this range. That is a short-term price action. So provided we fall, let's just hypothetically say we fall and we go down to 24.8 or 28.4. Why is 28.4 such a key level? Why do I keep mentioning it? And what significance does it hold? So to understand, we need to go to our weekly chart. This is our weekly chart over here. We can see a very key technical indicator on the weekly chart called the Gaussian channel. The Gaussian channel has historically been phenomenal at predicting overall macro trend directions. Is very good at predicting the strength of trend and the overall direction of trend. Is actually pretty good at predicting high time frame reversals of strength. Not trend, but strength. And we can use that to go ahead and infer the probabilities of reversals on the price chart. So, number one, 28.4 not only is a key horizontal level, it actually formulates the high point of that Gaussian channel band, this level over here. So that upper band of the Gaussian channel. Now, generally when we break into the Gaussian channel from the top side down, we see a continuation through it. Therefore, we can say if we break into the Gaussian channel from the top side down, we have quite a high chance of continuing downwards to either retest the midline or potentially worst case scenario, retest the bottom line of the Gaussian channel. This is why it's a very significant level. If we extrapolate this information, this theory, to a monthly chart, we can also see on the monthly chart, every single time we have broken a monthly candle above the horizontal resistance, okay, which was once the horizontal support of the bull market, okay, and bear market, you can see these levels over here. When we break a monthly candle above, we also break a weekly candle above the red Gaussian channel. The price then remains above the Gaussian channel until it reaches the dotted trend line. The dotted trend line being that high point of the dead cat bounce, just on that Gaussian channel. We can see it once more over here. We break out on the monthly chart, we break through, we push up to retest that high point there. In this instance, we have never seen a scenario where Bitcoin has broken out of the Gaussian channel weekly and broken above that horizontal level and failed to retest its high point and broken back under the Gaussian channel. So if this happens, it would be a significant display of weakness, something we haven't seen occur before, and it would suggest Bitcoin could potentially go down. Furthermore, if we're looking at the momentum, we can see the RSI has broken below a key structural level, which is going to be the 62.09 point on the RSI. You're probably thinking, what the hell is this number, Whale? What are you talking about? Well, let's take a look. Let's take a look at it, guys. Every single time we break from the top side of the 62.09 on the RSI towards the downside, Bitcoin sees a correction. And not just any correction. The smallest correction we have seen has been 20%, and that was that prior breakdown right over here. Let's take a look. This is just the last 4 years. Let's go back to 5 or 6 years. This is 5 years of price action every single time without fail. When we have seen a cross of this level, Bitcoin has seen a significant correction over weeks, over months, over years from that point, until Bitcoin then finally breaks back above that same level. When we break back above that same level, we then continue upwards. If we change these to green lines, we can see from that point, we see continuation upward. From this point, we see a continuation upwards. From this point, we see a continuation upwards. From this point again, we see a continuation upwards. And from this point again, we see a continuation upwards. This is not random stuff. Momentum drives price. We are looking at high time frame levels where momentum is in real time shifting from strong positive to weak positive and strong negative to weak negative, which can conflate to high time frame reversals on the price chart. So why am I telling you this? Well, we know that there's a high probability of going to 28.4 on the higher time frame. If that occurs, we are going to be retesting the Gaussian channel. If we lose the Gaussian channel, which will be quite high since momentum is falling down, we are at risk of moving downwards on the chart towards our weekly structural uptrend. This is the overall uptrend Bitcoin has been in now for the last 5 or so months. If we lose this level, that is when Bitcoin is in a downtrend, not a second sooner. If we lose this uptrend level, Bitcoin is at massive risk of completing a head and shoulder pattern and potentially falling as low as 20,000. This is not something we want to be ignoring. This is very key, very important we pay attention to this, because if we do not get above 32,000, we cannot invalidate this level. We need to get the price above 32,000 to invalidate this level and continue upwards. If 32,000 does not break and we break towards the downside over here, this would be a weekly shift in direction. If we zoom back out on this chart over here, we can see, on the charts over here, we have these red boxes. We can see under 28.4, we enter a daily bearish trend. Under 26.8, we enter that weekly bearish trend, and that continues toward that downside. So pay attention, watch the charts, very crucial stuff. But that is enough doom and gloom. And actually, no, it's not. One more thing, if interest rates continue to go up, that is likely going to accelerate or force the prices towards that direction. But it's not all doom and gloom, should I say, because until those negative things occur, Bitcoin's still on an uptrend. Until those negative things occur, the weekly structural chart, the monthly chart is still actually relatively bullish. We are still seeing the things we are looking for the 4-year cycle to play out to actually have occurred. So although we are at massive risk of invalidating all that, although we're at massive risk of those things going to shit, really, and going down, until it happens, it hasn't happened, if that makes sense. So we're kind of watching that still, kind of paying attention, and we're understanding that until those triggers actually trigger off, until it occur, we have to be open to the possibility, but not completely shut off the possibility. And that is what I want to make everyone very aware of. It is not about being right. It is about making money. You should have multiple different scenarios you are conflating in your head, you're understanding, you're planning for. So when the scenario that actually plays out, you know exactly what to do, when to do it, and how to make money. You're not sitting there holding, wondering what the hell's going on, what do I do, what should I sell, should I buy? You're going on YouTube panicking, asking people to do things for you and freaking out. No, you're aware, you're understanding what's happening. You've got a objective and calculated plan that involves proper risk management, and you have your targets for that scenario. So although I think the price is going down over here. I still have a plan for the upside. The upside plan on short term was what described. Although I think the price is going down over here. And, you know, by over here, I mean, while the price remains over here, I actually expect to move upwards over here. But if we break above here, then I expect the price to go back upwards. And if we start breaking upwards again and start pushing upwards, guess what happens to the weekly chart? They start to look better. They start to look healthier. So short term, if it occurs on a short term over an extended period of time, it eventually reflects itself on the higher time frame. So if you look at the higher time frame, trying to figure out what to do next for the small time frame, you're always going to be late. You're always going to be late because the higher time frame is massively lagging to the smaller time frame. That's what a lot of people do. Watch the smaller time frame, watch what's happening, play these levels, scalp trade these levels, take swings at key structural supports, take shorts at key structural resistances, and watch for these main trigger points to break. I think I'm going to wrap it up there, guys. If I want to leave one key message, it's going to be the weekly trend is still up. Bitcoin is still technically bullish, but it is massively and very quickly losing bullish strength. We are shorting these small moves. We are longing the higher time frames. Make sure that you do not get caught on the wrong side of the trend, and very much so make sure you are able to differentiate short-term strength to high time frame weakness and high time frame weakness to short-term strength. Just because you are bearish on a small time frame, it doesn't mean you should be bearish on a macro chart, and just because you're bullish on a macro chart doesn't mean you should be bullish on a small time frame. Trade each time frame separately. Identify the key levels on each time frame separately. And make sure you have a plan to execute your higher time frame direction and your smaller time frame direction. Sorry, I just banged the mic if you heard that. And trade properly, guys. Trade properly. Thanks for watching. I hope you enjoyed today's video. There's obviously so much more I want to discuss, but I don't like to go over 25 minutes. So go ahead and check us out down below on Crypto Academy courses. And with that being said, thanks for watching. See you tomorrow.